This demonstration from the cash module deals with the issue of petty cash and the cash drawer and accounting for money in the cash drawer. It's similar to the problems you will find in your textbook dealing with these particular subjects. Yogi Delivery had the following selected transactions for the month of November. Our job is to journalize the entry and update the cash short and over account, state whether the cash short and over account will be treated as an expense or a revenue on the income statement. Here we see the various transactions that we have to deal with, November 3rd through November 30th, and we need to journalize these for each of these individual days. So let's just start with the first transaction. On November 3rd, we established a petty cash fund for $300. So in order to journalize this transaction, we have to first go to a journal. Here's our date, November 3rd. And we are establishing petty cash. It's an asset account. The amount is $300, and it comes from our regular cash account. So that concludes the journal entry for that transaction. The next transaction is on November 10th. It says cash sales for the day, according to the cash register records, are $875.60. The actual cash drawer at the end of the day had $830.60 in it. One important note from our discussion above is that the change fund in the drawer is $50 for the cashiers. So in order to determine our cash sales in the drawer, we have to subtract the change fund. And so the actual cash is $830. We have to subtract out the change fund of $50. And so that leaves us with $780.60. So in order to journalize this transaction, when we do these cash short and over transactions, the date is November 10th, I always like to go to the first line, the debit line, and put in cash, and we put in the actual amount of cash, which was the $780.60. Whoops, $780.60. And remember, we got that from the fact that there was a total of $830.60 in the drawer. We have to take out the $50 of cash fund, and that gives us our cash, $780.60. Let's make this look good here while we're at it. Now, I like to skip the middle line because that's going to be our cash short and over account, and we don't know yet whether it's going to be a debit or a credit. So I like to skip a line, go down here and record our sales, and the sales are whatever the cash register tape says the sales were. And back in our transaction, it says it was $785.60. So $785.60. And so if we look at our debits and our credits here, we see that we have $780.60 worth of debits and $785.60 worth of credits. And so our cash short and over in this case needs to be a debit in order to make our debits equal our credits. And the amount here is $5. All right, that takes care of that transaction. We look at the next transaction, and it's on November 29th, and it says the actual cash in the petty cash safe is $45.50. And our job is to replenish the petty cash fund based on the following transaction receipts left in the safe. And we see here that throughout the month, we had store supplies purchased for $75. We bought some Girl Scout cookies for the office meeting. Charged that to miscellaneous administrative expenses for $25. Postage due on parcel, charged to delivery expense $35. Copy machine repair, charged to equipment maintenance expense for $65. And then lunch for the office meeting, charged to miscellaneous administrative expenses $50. So anytime we replenish petty cash, we go with what's in the drawer, and we subtract that from the original petty cash fund amount, $300 minus $45.50. And that tells us how much cash we have to put back into the petty cash fund. In this case, $300 minus $45.50 means we have to put $254.50 of cash back into the petty cash fund in order to make it back to $300, and that is our goal. So remember that number, $254.50. Our debits are to expense accounts and asset accounts depending on what they have here. And so if we've got some that are duplicates like this, miscellaneous administrative expenses here, miscellaneous administrative expenses here, we'll have one entry of $75 to miscellaneous administrative expenses. We bought some store supplies and asset. We'll have one entry to that for $75. We've got a delivery expense, and we've got equipment maintenance expense. So we need to go record some debits to these expense accounts and asset accounts. So the date here is November 29th. The date here on the problem for these individual transactions is irrelevant. This recording is to replenish petty cash, and it occurs on November 29th. So we put that in here, November 29th. And our first account is store supplies. We bought some assets. They're not store supplies expense because we haven't used them up yet. The amount, if we go back and check, was $75 there. We also had some miscellaneous administrative expenses. That was for the Girl Scout cookies and for the lunch for the office. And if we total those two amounts, Girl Scout cookies were $25 and the lunch was $50. That's a total of $75. We're going to debit to miscellaneous administrative expenses, $75. We had a delivery expense for some postage due on a package, and that was for $35. So that's a debit to that expense for $35. And then we had the equipment maintenance. And that amount, again, if we check, was right here, copy machine repair, $65. Now, if we add these debits up, they do not add up to $254.50, which is the amount we're going to credit cash for, $254.50 to cash. And so we're going to use our new account, cash shorten over, to make up the difference. Cash shorten over is somebody took some money out of petty cash. They didn't leave a receipt. We don't know what to charge it to, so we charge it to this account, cash shorten over. If we add these up, they add up to be $250 worth of debits. So we need another $4.50 worth of debits to get us to the amount of our credit, $254.50. Remember, this credit amount here to cash is always going to be our original petty cash amount less what's in the petty cash drawer. In our case, it was $45.50. That gets us to the amount we need to get back to $300, which is $254.50. The next transaction we have is on November 30th, and again we have a cash register sale transaction here, and it says cash according to the cash register records are cash sales according to the cash register records are $550. The actual cash in the drawer at the end of the day is $604.50. We have to again subtract the cash fund from the actual cash in the drawer. The cash fund is $50. $604.50 minus $50 is $554.10. So in our journal entry, again, this is November 30th. We're going to debit cash for $554.50. I'm sorry, $554.10. And then we're going to skip a line. We're going to credit sales for the amount of the cash register tape, which is $550. And here we see, if we compare our debits to our credits, our debits are higher. We need a credit to make our credits equal to our debits. And so in this particular case, our cash shorten over is going to be a credit of $4.10 to make our debits equal our credits. And then finally, our last transaction says increase the petty cash fund to $400. Well, we started with a balance of $300, and to get our petty cash fund balance to be $400, we add another $100, and that'll get us to $400. So if we go journalize that transaction, we have not enough room. We have to insert a line here. We have cash, November 30th. We have petty cash. We're going to add another $100 to it to make our ending balance $400. And that, again, comes from our cash account. Now, be careful here. Depending on your textbook and the wording of the problem, this particular transaction could say, increase the petty cash fund by $100, or it could say, increase the petty cash fund to $400. It would require the same journal entry, but read carefully what the question is telling you to do. Increase it by a certain amount or increase it to a certain level. And depending on how it's stated, that will determine what your adjusting entry is here to get it to that correct amount. Now, that was the transactions. We recorded all those, but we're not completely done yet. It says to track in a T account the balance in our cash short and over and determine at the end of all that whether it's going to be recorded as an expense or a revenue on our income statement. So we're going to look down through here, and every time we've made a cash and short over entry, here we have a $5 debit, and here we have a $4.50 debit. And here we have a $4.10 credit. And so when all that's said and done, we have $9.50 worth of debits, $4.10 worth of credits. That means the ending balance in our account is a $6, whoops, not 600, a $6 debit. And so our ending balance in our cash short and over account, $6 on the debit side. Whenever the ending balance for cash short and over is a debit, we treat it as an expense account on our income statement. Had we come up with this entire process and we would ended up with a cash short and over and a credit balance, then it would be treated as a revenue on our income statement. This concludes our demonstration problem on petty cash and the cash short and over account. I hope you found it beneficial. If you have any questions, don't hesitate to call and ask, and we'll look forward to seeing you in the next lecture or demonstration problem.